Hello everybody. Today we will try to understand some hidden adjustments that trouble most of the HSC students in partnership file accounts. Let us understand the first adjustment that I have taken is 10% investment given in the trial balance without any date. Okay, we'll go step by step. First, without any date, with date, and then with interest given. So let's understand this simple adjustment. When 10% investments are given in the trial balance on the debit side, all you have to do, write 10% investments in asset side. If amount is 3 lakhs, put it in inner column, add accrued interest, meaning we have to assume accrued interest, meaning we have to assume that this investment is purchased on the first day of the accounting year. Okay, if date is not mentioned, it means it was there on 1st April as well. So 1st April to 31st March, full year's interest you will calculate. So in this example, 3 lakh into 10% for the full year comes to 30,000. And then you will write the total investment value outside 3 lakh 30,000. The second effect of this accrued interest would come here, and you will write in profit and loss account by interest on investment directly on the outer column. Simple. This is it. Hope you have understood the first type where there was no date. Now, in this type of adjustment, the date of purchase of investment is given to you. In that case, the effect in the balance sheet remains same. Like you will show 10% investment, 3 lakh rupees in the balance sheet on the asset side, the way I have shown it. But interest will be calculated this way. Look at this. 10% investment was purchased on 110, so calculation will go like this: 3 lakhs into 10 on 100 into how many months? If it is purchased on 1st of October, it will be calculated for 6 months. So interest will be calculated for 6 months. How much will be the interest? If we calculate this, the interest would be 15,000, and you will show it in 2 places. Number 1, as accrued interest on balance sheet asset side, 15,000. And the second effect, let me add this, the final answer, and then the second effect will be shown on in profit and loss account on the credit side by interest on investment, 15,000. That's it. Okay, so the third case in which investment will be given to you in the trial balance, the date of purchase would be given to you, again same in the trial balance, and interest on investment, that is also given in trial balance on the credit side. So if this happens, then what we are supposed to do? first of all understand the meaning of this adjustment. In this hidden adjustment, they expect us to calculate the interest receivable, meaning this interest is not the full amount of interest receivable. Okay, suppose the investment was worth 3 lakhs, we will directly write it in the balance sheet asset side as 3 lakh. Then the amount of interest received shown in the trial balance would be shown in the profit and loss account on the credit side as interest on investment. But if you see properly, the amount of investment is 3 lakhs and 10% is the rate of interest. And if you see the date, on 1st October we have to calculate the interest. So for 1st October to 31st March, 6 months interest we need to calculate, which will come to 15,000. This 15,000 is the amount of interest which you should receive. But how much did you receive? Only 10,000 during the year, which means 5,000 is still receivable. 10,000 received and 5,000 is accrued. So accrued interest rupees 5,000 will be shown in profit and loss account on the credit side. Total this, write on the outer column as 15,000. Then second effect, come to asset side, 10% investment, and just write the accrued interest. I repeat, only accrued interest, not the total interest received. Okay, total interest received is 10,000, 5,000 is receivable, total interest earned is 15,000. So accrued interest is how much? Only 5,000. Write 5,000 and on the outer column you will write the total 3 lakh 5,000. That's it.